Good morning, this is Federico Bentley from Ayondo Markets giving you this morning's market update. This morning we start by focusing on the Treasury as it's under fire from Britain's building societies who say that a new tax will cost them at least £630 million over the next 5 years and choke off £20 billion worth of lending. Chancellor George Osborne wants to gradually reduce the bank levy rate over the next 6 years from 0.21% to 0.1%, while introducing a new tax on the entire sector, including building societies and smaller challenger banks that are currently exempt from the charge. After the changes made in the budget, 6 building societies will have to pay an 8% surcharge on profits over £25 million, whereas only Nationwide previously had to pay the levy. Now looking at European markets, the UK 100 rolling is trading 71 points lower in this morning's trading. The France 40 rolling is 53 points lower, and as for the Germany 30 rolling is trading 150 points below its open. Asian shares fell to a 2-year low this morning after Chinese stocks extended their plunge amid growing concerns that government could be scaling back its rescue efforts. Recently, Beijing has made a number of interventions to shore up the country's tumultuous markets. Now skipping across the pond, the Wall Street rolling fell 33 points, or 0.19% to 17,511.48. The US 500 lost over 5 points, or 0.26% to 2,096.88. And the US tech rolling dropped over 32 points, or 0.64% to 5,059.35. News regarding Greece: German lawmakers are expected to vote overwhelmingly in favour of Greece's third bailout today, despite the fact Chancellor Angela Merkel faces a rebellion in her own party ranks. Looking over to Brazil, crisis is engulfing Brazil as hundreds of thousands of protesters have taken to the streets demanding the impeachment of President Dilma Rousseff as the country slides into its worst economic crisis for 25 years. Inflation surged to 9.5% at the end of July, the highest rate in 12 years, while the economy is in recession and expected to contract up to 2% this year. The Brazilian real has fallen heavily and the strength of the country's bank has been called into question. Last week, its government debt was downgraded to one notch above junk status by rating agents Moody's. Protesters are calling for Rousseff to be impeached over the so-called car wash corruption scandal that has been unraveling a state-owned oil company Petrobras, where $2 billion is alleged to have been stolen to pay for bribes. Protests have taken place across the country in the third major day of demonstrations this year, following unrest in March and April. Turning to commodities, silver for September delivery is down 3.19% to $14.81 per ounce, while gold for December delivery is falling 0.17% to $1,116.50 an ounce. The US interest rate is likely to increase this fall as strong US data continues to be released, which will strengthen the dollar, giving precious metals a disadvantage as they're both inversely correlated. Now for some corporate news. Miner Glencore made a net loss of £431 million in the first half of 2014 amid the global commodities rout, down from a $1.72 billion profit during the same period a year earlier. Hikma Pharmaceuticals said group revenue fell 4% to £452 million in the 6 months ended 30th of June 2015. Imperial Tobacco's net revenue rose 14% in the 9 months ended 30th of June. Now for some key data and focus. Minutes from the Federal Reserve's July meeting, due out this evening, could provide more clarity over when short-term rates will rise. Later today, we have at 9:30 a.m. the EU balance of payments, and at 12 p.m. we have the US MBA mortgage applications, and at 1:30 p.m. we have US Consumer Price Index. At 3:30 we have the US crude oil inventories, and at 7 p.m. this evening we have the FOMC interest rate decision. That's all for today's news, so thank you very much for listening, and all the best on your day's trading.